Welcome to Shaping the New York City Skyline, a podcast that explores the stories behind the buildings that shape our city. With your hosts, David Shamshovich, Brenda Slokowski, and Camilla Almeida.
Hey guys, welcome back.
Hello, everybody.
We're back in the studio.
That's right. We're back in the studio, and we're excited to continue our travels down season 3 lane with another wonderful guest. Maybe not a household name, but certainly a powerhouse. Someone by the name of Douglas Romero from Ponce Bank, and I say that Ponce because I think that's how you pronounce it.
That is how you pronounce it.
Okay, good.
Yeah, there's the accent. It's very important.
And they're a local community bank that's in the Bronx. And Doug is he works on the commercial loans for various areas in the city and a little bit of outside the city. And he came on to give the lender's perspective, some more transparency behind the process and how do you go about getting a loan and what the procedure is in terms of underwriting and other aspects. But more importantly, he gave us a clue into how he rose to the ranks. Literally, I mean, listen, NYC born and bred, first generation American immigrant parents who really instilled in him education, and he literally worked his way up from the mailroom to the loan approval committee.
Spoilers, guys.
It was very interesting and see how his trajectory evolved throughout the years and reflecting a little bit of his culture too. How his parents instilled the education point, and I know that more than anyone, how it works.
That's right. That's right.
So it was interesting to see that.
And I really enjoyed listening to his passion and the heart that he puts into every deal, the intentionality that he has in shaping the New York City skyline. He just really, it shows through in his intelligence and his commitment to bettering his community. And you know what? These projects would not get built without him funding. So got to hit him up.
Yeah, listen, the lenders are important, and having good lenders who can spot good projects and who can give out loans, both the lender side and the developer side, will benefit from is key. It's important. It's important for the city. It's important for the people of the city, and we need more good and great people like Doug, like Ponce Bank, to make sure that things stay on track.
Yeah, I really liked hearing that this specifically is more catered towards your smaller banks, your smaller institutions. He made a point of saying he's not in the business of owning and operating real estate because he wants your deal to succeed. He wants to see that you're doing a good job in maintaining your property and operating your property because that's their investment. They're investing in you as a developer and you as a project, and they don't want to have to take it over. That's the worst case scenario. Yeah. He wants to see it succeed. So he's in his education and his perspective lends itself heavily towards finding those good deals and investing in those good deals, and you can see it in his interview, which I really liked.
Yeah, I mean, he went a little bit into kind of the bad times, the 2008 financial crisis, and
listen,
how bad
economy moves up and down.
Yeah, we talked a little bit about everything.
Yeah, I think our Skyliners are going to certainly enjoy it. New perspective, as we always try to provide. It's kind of a niche also because it's not just about commercial lending. It's about commercial lending from the community bank perspective. Not completely different from a general lender. I think you guys are going to really find it insightful, and we did also. We learned a ton, as we usually do. And without further ado, it's Doug Romero from Ponce Bank.
Woo!
Our guest today is Douglas Romero, Vice President and Head of Construction Lending at Ponce Bank. He's recognized as one of City and State's Construction Power 100 in 2023. Douglas is a dynamic leader in real estate finance and an instrumental figure in shaping
the New York City skyline.
Douglas and I had the pleasure of speaking together on a panel at the Affordable Housing Summit where we tackled the complexities of the 485X tax exemption back when it first released and its implications for affordable housing development, much of which we still haven't seen and we're hoping to see in the years to come. And that occurred obviously prior to its adoption of the City of Yes zoning text amendment for housing opportunity, which just passed in December. Ponce Bank, a mission-driven Hispanic American-owned institution founded in the Bronx, Douglas plays a pivotal role in providing loans and financial education to underserved communities. His efforts ensure small businesses and first-time homebuyers have the tools to succeed while transforming neighborhoods across New York City. Today, we'll delve into Douglas's journey into real estate finance, the critical role of banks like Ponce in empowering developers and small business owners, and his insights into construction lending trends, ESG goals, and the ongoing challenges of building affordable housing in NYC. Get ready for a fascinating and welcome to the show. We're so excited to have you.
Thank you very much. Thank you. Thank you, David.
Listen, all this stuff is true, and we're really excited to have you on for many reasons. First of all, you're a great guy,
Thank you.
I think we definitely connected on that panel that we were on. But secondly, we haven't much had the banker or the lender's perspective on this show. Yes, we've discussed it, and we've assumed, given our roles as attorneys and how we deal with lenders and lenders counsel, but now we have somebody kind of in the hot seat. But more than that, right, you're kind of in this underserved community dealing with small businesses, trying not just to provide construction loans and acquisition loans, but also to educate and to assist and really help the community. So it's a very interesting place to be, and it's even more interesting given the package of housing tools that we have now at our disposal. You grew up in New York City. What was it like when you were growing up? How did what kind of things did you do, education-wise, college-wise, to get to becoming a lender?
Absolutely. Thank you for all those very kind words. And yes, New York City, born and raised. I grew up in Queens, 100% product of the New York public education system. Through and through, public school elementary, public school junior high, high school, and City University, Baruch.
Baruch College.
Yes, Baruch College.
Very familiar.
Yeah, great educational background. It is there for those who put in the effort. And I put in the effort. Sometimes, as a kid, you want to slack a little bit, but Mom was always
there with the ruler.
Yeah, the ruler, to put it mildly.
Yeah, when we were growing up, it was a little bit different.
Yeah.
My mom would just basically throw whatever was next to her, and I just hope I was taking away all the lamps from the tables to make sure that
It clearly worked.
Yeah, I mean, it's
There
like
you go, successful attorney right there.
Absolutely. Everything starts with solid parenting, and I'm super grateful for Mom. She was always there behind me, pushing me to make sure that we did something, with ourselves, that we found meaning, we found purpose.
Was your mom an immigrant, or did you have immigrant in your family, or have you guys been here for a while?
Yeah, so I am a first generation American, parents from El Salvador. They came here in the early 80s. It was a difficult time back in Central America. There was a civil war going on, so they emigrated up here, and
I'm also familiar. My mom's from the Soviet Union. She came here in the 70s. I, too, am first generation American, also obviously escaping because Soviet Union was not a great place to live, so I completely understand that.
So they were very big on go to school, be an upstanding, citizen. They'd, of course, you want to play outside, you want to play in the neighborhoods, but, 7 o'clock, listen, it's dinner time, you have to come in, you do your homework, it better be done since you were already outside.
I can't help you with it. That was my mom. I couldn't help you with it, but you gotta get it done.
Absolutely. And then my father was a small business owner. My father had a small restaurant in Corona, Queens. So I grew up there.
What kind of food did they serve?
It was an Argentine restaurant. His first job coming to the United States was at that restaurant, or one of his first jobs. And the opportunity came where the owner of the restaurant wanted to sell the restaurant, and he wanted to retire, go back to Argentina. And my father saw the opportunity with my mom to purchase this restaurant. Now, back then, they didn't have access to capital.
Yeah.
So this kind of, played into, I guess, my perception on, business and capital and how do you, push forward. He couldn't go a conventional route to purchase this restaurant. So he had to go more on the attorney hard money route.
Yeah.
To secure the funds to purchase this. And
that's the immigrant mentality too. You do what you need to do
to get ahead.
So I completely understand that, by the way.
Absolutely. And thankfully, so with all business, right? If you come into it with a positive attitude, good solid work ethic and a desire to really persevere and do the right thing, yeah, some credit is a little more expensive than others, but you make sure you don't get into a situation where you're in over your head and you essentially drown.
Yeah.
You have to be frugal, you have to be responsible, you have to be diligent. And thankfully it panned out. It panned out. The restaurant was retained successfully for over 2 decades. It was probably one of the more famous restaurants in Queens, especially at that time. And
How involved were you were you working there
yeah,
at times?
super involved. So 12 years old, didn't have a choice. They said, you're going to work every weekend. Okay, great. Saturday, Sundays, you want to sleep in?
Nope.
There's no sleeping in. What do you mean sleep? What is sleep?
Do you have siblings?
I do have a younger sister, 2 years younger. She is a teacher. She's an elementary school teacher out in Brentwood.
What does she teach?
5th grade.
Good for her.
Yeah, it is tough. It is tough work. And well, Dad's retired. Mom's still working. Mom is a psychologist, social worker, Department of Education.
Wow.
Oh, wow.
Yeah. So, we've gotten into these discussions. My impact and my contributions to society is a bit different. It's measured in more, units and numbers of properties and projects that we finance, that we get behind and we support. In her case, she touches like literal individuals, pushing them to making sure that, listen, if you're going to come to this country, you want to pursue that higher education, you're going to go to college, and that's what we want for you, to be a fully functioning, upstanding contributor to society. I participate in a career day, and I guess they really took a liking to the story because and it's the truth. I am you, you are me. There's no difference.
Yeah.
Whatever you want to achieve, and that's where this country is still the greatest country on earth. If you work hard enough and you envision it, you can get there.
Yeah.
But it's not going to be given to you.
No.
And they said, oh, bring this little guy back. We got to make him do the next one.
Everybody in your family kind of leads you to what you're doing now, right? Small business, helping the community, educators, and that's kind of where you fell to, although something completely different. So, I mean, Baruch obviously is known for its business programs. They have stellar business programs, right? And a lot of people go to the school, and it's cheaper than most of the more expensive schools, and you get a great education, has a great reputation. How did you, first of all, decide to go there versus somewhere else? And then what was your intention when you went to school? Did you know where you were headed?
No. So in high school, so I from 12 onward, 16-ish, it was always the restaurant, and then somewhere in between, I put it into my head that I was going to be a professional boxer. So I started after school. I used to go to a boxing gym out in Glendale. So I went and did a little bit of that, and then the opportunity came up in high school. So I have an uncle who, bless his soul, he was a banker, and he was he was always the kind of the go-getter, the one that I don't have a glass ceiling type of guy.
Yeah.
And he basically got to this country and just said, I'm going to go work at a bank, landed a job at a bank. He's worked for a lot of small community banks in Manhattan. And so one day he gave me a tip on a banking opportunity. He said, listen, they're hiring for like basic operations, mailroom. It's kind of like an internship, but if you really want it, go apply. I didn't think much of it. I go and I applied. I was like, okay, great. Then one day I get a call back. It's like, hey, you got the job. So I was going to Forest Hills High School. I went to Forest Hills, and this was before college. And their office, their operations office, was in Jersey City. And because I was a senior, I got out a little earlier.
Yeah. I can imagine that's just like an hour and a half trip there, right?
Yeah.
Because it's a roundabout. There's not like a direct way to get there.
Correct.
Via transportation.
F train to 34th, and then take the path to Journal Square. I'd get out of class at 11:30, and by 1 o'clock I was there. No time for lunch. I'd bring my clothes, change in the locker room. I had my little khaki pants and my little button down and my clip-on tie.
You had a clip-on tie?
I had a clip-on tie, man. I didn't know how to tie a knot.
I don't think I knew it for a while. My mom had to teach me how to do it.
My dad didn't either.
Yeah. Oh, really?
Yeah, nobody knew how to tie a knot. It was a thing, and YouTube didn't exist. So just That was the easiest way to just, and it was always perfect.
That's true.
Yeah.
I think I'm going to switch
It
to
worked.
clip-ons from now on.
If you were a clip-on tie to the office.
So you go into that the first
So-
day, and what is that day like? What are you doing?
It was a little disorienting. So the first bank is and they don't exist anymore. They sold their banking charter here in New York, but it was a great institution. So it was Banco Popular Dominicano,
Yeah,
BPD Bank.
I've heard of them.
Okay, I think they sold their charter in like around 2013, somewhere around there. But
So what does that exactly mean in order to conduct business?
Yes. So for you to be a licensed institution, you have to get what's called a banking charter. It's basically your license to borrow funds from the government and redeploy into the public and conduct banking operations. And for you to get a charter and get approved, you have to convey to your supervising body, and depending, there's state charters and there's federal charters. On the state side, it was the New York Fed, New York Banking Department, New York State Banking Department. They have to approve, I believe, and you have to specifically cite what community you intend to serve. So their premise was, we're here to serve the Dominican population of New York City.
But they were in Jersey City.
They had their operations in Jersey.
Okay, so that's fine. It doesn't matter where you're operating. You could serve whatever community you want to.
So everything has to be spelled out in your banking, in your policy. Essentially, you have to identify the loans you plan on providing. You have to stipulate the parameters of those loans, the community you tend to serve, the catchment areas. You literally have to identify your geographic catchment. We are going to lend primarily in New York City, the 5 boroughs, Hudson, Bergen County, Connecticut. Now I'm giving you the Ponce Bank catchment. You have to identify this up front, and it has to be policized, and it has to be approved with your supervising regulatory body.
Do they check up on and audit those things?
Yeah, all the time. So if you'll have outliers, they always check new originations. Banking is very, very regulated. It is a challenge to navigate through all the regulation, and not to go on a tangent, but even more so when regulation breaks even further from just your standard safety and soundness, and we'll define what that means.
Yeah.
To interweaving social causes, and then that adds an extra layer of to the banking spectrum.
Starting on the ground floor, literally. You're starting in the mailroom.
Back then, I didn't have a cell phone. We're talking 2003. And I remember a day, I roughly would calculate what time, so the job was from 1 to 5. I remember one day I was like, it's got to be 5 o'clock already. I get out of the mailroom. It's like 6. Everybody's gone.
That never happens to me. Every time I look at the
Nope.
clock and I'm like, oh, it's got to be 1 p.m.
Yeah.
It's only like 11:30 in the morning.
So I had dual functions. I had the handing out the mail, the filing room. I kind of became a custodian for a lot of the lending files. A mortgage document, a mortgage file. These are collateral documents. You have to log those things out and log them back in. Who took it?
Yeah.
Did they ever bring it back? And so one of the things that was advantageous was on the handing out of the mail, which everybody avoided. Nobody wanted to do that.
Yeah.
I did it happily.
You get to meet everybody
I got
that
to
way.
meet everybody.
That's the smartest move you can make.
I got to walk into all the offices, all the EVPs, the VPs, the loan officers, and you start establishing that rapport.
Yeah.
Hey, Mr. Paul. Hey, Mr. Robert. Hey, Mr. Rick. How are you guys? And God bless those guys, because they're the best. They took me in eventually. And when you start building that rapport, hey, you grew up in Queens. Hey, I grew up in Brooklyn. Hey, you like this restaurant. Hey, you go to that school. Hey, I went to that school. And, they see it. You born and raised in New York City, just like them. And now where banking was cool, because I always knew I wanted to get into business, and banking gives you exposure to many businesses.
Yeah.
So it's not just the lending area. You also had treasury. You also had operations. You also had IT. You had compliance. Absolutely. So you go and you get exposure, and you start steering with that basis. Okay, what area do I seem to want to go into? Initially, I was interested in treasury. The whole taking deposits, buying muni CDs. So there's always a float. Every time you have deposits and excess funds, it's never good to just leave the fund sitting in the bank. You got to take these funds and manage the cash.
Yeah,
You know,
otherwise it's not growing.
Yeah, whether it be short-term investments, you know, to
At least to keep up with inflation, right?
Yeah.
Absolutely. So at a particular point in time, so my parents were separating, and mom wanted to refinance the house. Doesn't know anything about anything when it comes to finance. So I just picked up a book, Mortgages for Dummies. And on the train, on the path, I literally read it cover to cover.
Some of those books are actually pretty good.
They're
those
pretty
dummy
good.
books.
Yeah.
I love them.
Yes,
I love them.
they are.
They're
I mean, now
literally-
different, right? You have like you said, you have YouTube. But
Yeah.
those back in the day, I would probably have done the same thing.
It was an awesome, easy to read.
Yeah.
Like 17, 18 years old, digesting this. I got to a point where it's like, okay, I got to respond because mom's not going to do
Yeah.
it. And she, no interest in business or anything to do
Yeah.
with contracts or anything. So I read the book. I'm talking to some of the loan officers. I'm getting ideas. I ended up having conversations with some, and this was pre GFC, right? Pre financial crisis.
Yeah.
And back then, lending and loan, there was no such thing as a bad loan. It didn't exist. And I remember, okay, we're gonna refinance this, and I talked to guys at Wells. I talked to some, mortgage brokers. And everybody said, "Oh, we're gonna sign you up for this piggyback loan. Mom's gonna get a windfall right now. She has no idea."
So you're not just reading book for dummies, but you're also
Negotiate.
negotiating.
I basically got to run with the negotiation.
But not only you're like swimming with sharks. Like you're trying to learn this stuff in the most hostile, where everybody's trying to tell you can afford it.
So.
That's a much harder.
Yeah.
That's a much harder task.
Yeah.
Yeah.
So
Did the book cover any of that stuff?
it covered no, it didn't cover structure, but it did cover all the basic terminology. So you had to kind of piece it together.
Yeah.
So the one guy saying, "Okay, I'm going to give you an 80% first and a 20% piggyback loan, and you're going to have to pay PMI, and you're going to have to.
Oh, jeez.
It's going to be on a 30-year AM, and the second part is going to be an ARM, and the book gave me the
Right.
foundation.
So you just changed the
Yeah, I read
the interest
this.
rate. Yeah.
I read this.
Yeah.
Okay, adjustable rate mortgage. Got it. Mortgage insurance. Okay,
Yeah.
because of the exposure, and I got to pay private mortgage insurance. Okay, I get it. Points. What's a point?
Yeah.
Right.
It's what you pay when your credit isn't good enough to get a
100%. 100%. So navigating through all that, one mortgage brokerage out in, I think it was like Syosset in Long Island. I literally took the Long Island Railroad to go meet with them, like at 7:00 at night. And it's a bunch of guys, and then there's like a poker table on the side.
Oh my God.
And they go and they say, "Listen, kid, you're pretty young and you seem to know the lingo. You would do great here. Like, we're making money hand over fist." And I said, "Sure." They said, "You could be focused on selling mortgages here in New York during the day. And if you want to put in the overtime, a guy like you can be selling mortgages at night in California because of the time
Yeah.
differential." I said, "You'll do great." I'm young. So I'm like,
Hell yeah.
yeah, the way you guys are making this sounds too good to be true.
That's a smart way of
So
thinking
you go
about it.
in to negotiate a loan, and
no,
you come out with a job.
With a job.
I ended up, I go looking for a loan. I got basically a job offer. I go back to the old, my trusted mentors, older loan officers, and they looked at me like I had two heads. They said, "Doug, yeah, things are good now, but we've been through a few cycles. You may end up losing your shirt."
Yeah.
I wouldn't necessarily jump into the residential space.
They're giving you good advice, right? Like, real estate's been
Yeah.
up and down. You've been
So-
through these really
Yeah.
terrible places. Are you going for it?
So no, they said, "Before you make a decision, let's have a couple conversations." A couple conversations happened internally. I don't know exactly who, but I do know that at the time the chief lending officer got involved and the executive vice president of the bank, they had a conversation and basically said he's a good kid, seems to have some potential. He's going to school. He's the kind of guy we want. Let's take him in.
You were still in the mailroom,
Yeah.
right? What position are they offering you to not go over to this residential space?
Property inspections.
Aha. What did you
Properties.
know about property inspections?
Nothing. Nothing. So
But you're a go-getter. You're into learning.
We're
You
gonna
got
figure
this.
it out. We're gonna figure it out. Property inspection for dummies was next. So essentially, okay. So just to break down lending in a general space, you have originations, which is your application intake. Then you have your underwriting, which is that process, right?
Well, tell the larger,
analyzing
let
the
people
deal.
know what that is exactly.
Okay, so at its onset, you first speak to a loan officer, the sales side of the house. And based on your needs, we're going to interact back and forth and basically tailor our lending products to you. How could our lending products benefit you and your needs? Term sheets get issued. At that point, we say, okay, this is the plan. If you're in agreement, this is what you're going to be offered. If you sign, give us a good faith deposit, and then we start. Okay. So let's just say it's a regular commercial mortgage. I need a 60% loan to value. Call it $6 million on a $10 million property. At a standard mortgage rate today, commercial was like 6.5% or 7%, somewhere in the middle. Certain asset classes have are deemed less riskier than others. So you don't price a residential the same you would price, let's say, an office building, right? Office being on the riskier end of the spectrum these days. Once a deal is made, essentially then it goes into application. From application, once we start putting we get the appraisal in, we get the phase 1 environmental, we collect all the financial documents, any pertinent, a lease abstract. You put all that together, now it makes it to underwriting. And underwriting is actual deal analysis. That is where we're going to take and call it like a book report for the deal. Why does this deal make sense? What is the profitability? Why is this good for both parties? How you want out, because if it doesn't make sense for the borrower and the owner, it's not going to make sense for the bank.
Yeah, we started at you do the underwriting, and the bank says, you know what,
Yay or nay.
Yay or
Right,
nay.
yay or nay. We do the underwriting. Once it goes in through underwriting, party doesn't end there. That's where it just started. So now we get into commitment letters. We get into the legal.
Are they still issuing commitment letters?
Yeah.
They are?
Absolutely. We're not in the business of real estate, of owning and operating.
Yeah.
Right.
That's not what a bank does. We're in the business of issuing loans, collecting an interest spread, getting repaid, repeat.
Yeah.
Right.
That's the traditional. And then aside from the depository services, that's a whole another side of the house.
Yeah.
But that's what we do in a nutshell. We don't give loans to have to then go
And foreclose,
and
take over the property.
and
Yeah.
Right.
go through that property and have
Yeah.
it as real estate owned by the bank.
But
And
you
then
have to have that security. That's just what it's.
we
You wanna
have to
be
have
as
that
sure as
security
possible.
because in the instances that someone defaults, you have to be ready to
Yeah.
take those
Right.
steps.
You started off as a property inspector.
Yes.
That's
So
what
how
we
did that? What did that look like?
So that property inspection component was part of a middle management process at that time with this institution. Once you close a deal you have to do annual reviews.
Mhm.
You have to manage this
Yeah.
book of loans every year. You have to ensure that your collateral is still standing.
I didn't know the lenders actually did that.
Absolutely. If
Yeah.
your portfolio is big enough, you actually have to hire third-party property inspectors. So part of the loan review process is that some staff members would reach out to ownership every year. Hey, right? That's a covenant on your
Yep.
loan documents. You have to ensure that the property is at a minimum 1.2 debt 5 debt service. I need an updated annual rent roll. I need an updated operating expense.
You mean net,
form.
so net income statements from the
Correct.
guarantors every
Correct.
year, other financial statements.
Correct.
Rent rolls,
Whatever
all
the
that.
bank deems reasonable to perform an annual review. Usually banks have to have a certain degree of penetration of their portfolio. So argument's sake, if your portfolio is 100 million, you want to ideally penetrate a review of about 70%. So
Yeah.
dollar wise, you got to at least review $70
Yeah.
million worth of your loan. That's
Yeah.
ideal.
70.
Some years you hit it, maybe other years you dip under, and that's where your audit process comes in. You will constantly get audited on this. If Did you meet your thresholds? But your policy says that you had to review X amount and you didn't do it. This is effective portfolio management. This is the middle management aspect of it. So I kind of fell into that where I would go out and do these property inspections.
But how did you then move out of that? Because it doesn't sound like it was something that you wanted to do forever.
No, it was a starting point. I was thankful. I was very grateful to be part of the real estate team. They extended the olive branch. They said, Doug, stay with us, stay with the bank. You're going to learn commercial real estate. We were short on underwriters. We had a backlog on deals. And Doug, you speak English? I'm like, yeah, I think so.
Is that all it takes?
Yeah, I think so.
Last I checked.
Yeah, so they'll go give you an underwrite and try to follow this and see what you can do. I would help set up the underwrites.
Yeah.
I didn't fully become an underwriter overnight. And then just setting it up, give me more, and I started eating the deals. And what do I mean by that? Like, they'd give me a deal, and it'd be underwritten in like 3-4 days.
Yeah, because you started understanding how it works and what you need to look for.
And I was fascinated.
Yeah.
I loved underwriting. To the point where, I was obsessed. Every deal, you have to talk on the customer, the business plan, the rate of returns, what they're going to generate, what the bank is going to generate, why are you safe, your loan to values, did you do your environmental due diligence? Yeah, we did the phase 1, no problem. What are your recommendations and conclusions? You become Shakespeare at that point. You just start, I recommend this loan because of X, Y, Z. And you learn. You're learning the business. Yeah. First, you get a residential permanent mortgage. Then you get a construction deal. Oh, this guy's selling condos. Well, and it makes sense to you as a New Yorker, particularly, and this is what served us well, is somebody wants to do a brand new condo in Long Island City.
Yeah.
You know what they're hitting a square foot, $1,800 a square foot. But if somebody comes with those sales projections and says, listen, I'm going to do this in Kew Gardens, I said, no, you're not. Right. You're not there yet. You're not there. Same thing in Brooklyn. You know, in Bushwick, which is super hot right now. $1,200 a square foot. I can see that. You know, you go down to like Brighton area. Yeah. It's still a decent area. Stable. Working class. But maybe 12 is a little aggressive. Yeah. I don't think the demand matches that price point. But if you can underwrite at 1,000 a square foot and still demonstrate to the institution that you're going to make, not only you, but the developer and the bank, we're all going to win on this and we're not going to get stuck with this project. Those were the best deals to underwrite. And when you share and your passions and your enthusiasm aligns with that of the borrower, those were the best deals to underwrite.
Well, if the borrower's making money, then hopefully you're making money because you just gave out a great loan.
Absolutely.
Yeah.
So our test as lenders is no losses.
Yeah.
Right.
You want to be that hot shot in the institution. Not only are you working on the biggest deals, but you're also not losing.
Yeah, you're writing good loans. You're recommending good loans.
My guys don't fail.
Yeah.
And me personally, I take it very, very, I internalize it. My loans are my babies.
Yeah.
You know,
well, you're so clearly passionate about the underwriting portion. How did you move on?
And I want to say like around 2008, 2009, obviously things are slowing down. Now the crisis hit. We're in full swing. 2010, and the shift goes from lending and underwriting to damage control.
Yeah.
Right.
I felt like you were going to say that.
Yeah, now we're on damage control, and that I hated. Oh, man.
Did they have a
because now you're not making money. You're just trying to stop the bleeding.
You're trying to stop the bleeding, and we weren't a large institution. We were a small bank down in the financial district, 90 Broad Street. And just shifting to damage control. It was more emphasis on loan review. What went wrong? What did we miss?
Yeah.
I don't want to say that bank took any major hits because they didn't. Our underwriting was solid.
But you still had to do that.
But we still had to do it because now the regulators are on crisis mode.
Right.
And the regulators want to come in and they're safety and soundness. So then one day I get a phone call and they're like, hey, there's this bank in the Bronx. And I joined the institution in 2013. And I joined the institution under the capacity of loan review. So they wanted someone to help because we had hired a new chief risk management officer, and who subsequently is the guy I still work with today. He's transitioned to chief lending officer. He was the visionary when it came to the whole portfolio management, because how are we going to tackle this, and we need to achieve these penetration levels, and we want a robust credit management program. He's that guy. He's a perfectionist. And I always looked at it like I was the guy that helped lay the concrete. Okay, you just say what we want to do, and we're going to figure out
the
a
muscle.
way. I guess.
The executioner.
I guess. They definitely gave me some resources, but yeah, it was me and a team, and we just started hard on the whole loan review, and we got it back on track, and the regulators were super happy. We were just getting pats on the back. And then what ended up happening was one day one of our customers wanted to do a construction loan. It was somewhat sizable for the institution. And I got approached. It was like, we got to underwrite this construction loan. That's your background, right? And I'm like, yeah, that's actually what I did. And so at the previous institution, we did a lot of HPD construction. So when you do construction with the city of New York, there's no cutting corners. We want performance bonds. We want 10% letters of credit. You got to vet the GC. You have to have all your controls in place.
Right.
My previous institution, you had a lot of ringers in terms of executive management. Gentlemen that back from the old National Westminster Bank, guys from EAB, European American. These banks don't even exist anymore.
Right.
But these were like my original mentors, and these guys knew what they were doing. They were bankers. So I took all that with me, and then made it to the Bronx. And I want to say that all my banking dreams came true in the Bronx. Who would have ever expected, an obscure bank out of the Bronx was such a great place.
Yeah, it just goes
I fit in like perfect. Can't even describe.
And so you got that opportunity because you had the background, and you just happened to get that opportunity because you were doing this stuff and they needed somebody to do it. So we did a great job.
They were happy.
And then you were on your way.
And so I was part of the team. So this institution is small enough to the point where it's close knit, and we're all New Yorkers, right? The chairman of the bank, we have great leadership.
That's key.
That's key. Huge. The chairman of the bank, he's a Queens Bronx guy. It's not a block he does, and he used to. I'm saying too much, but back in the day, he used to drive a cab. So this guy knows New York City, knows New York City. President of the bank, awesome guy. He's a Manhattan, Brooklyn guy, so he's got those territories covered. Have you ever seen the movie A Slumdog Millionaire?
Oh yeah.
Where they're asking the questions. So I parallel it every time I get a loan request and they give me an address. I have a memory of either the neighborhood, the general location.
Yeah. Is it lending in a particular community, or is it kind of throughout New York City?
So it's throughout New York City. So our lending catchment is essentially New York City, Nassau, Suffolk, Hudson, Bergen, as a secondary catchment, Monmouth, and Connecticut up until Bridgeport-ish, around there. That's
and this is all commercial, real estate, multifamily.
So we're a full spectrum community bank. So we do have a residential mortgage division. We do a lot of residential retail credit. We do a lot of small business lending. Actually, that's something that we're ramping up. Particularly in the SBA world side of the house. We do offer full range of classic depository services, mobile banking. We do all that.
But your focus is the commercial lending side, right?
Commercial lending. I actually sit on the bank's loan committee.
Oh.
I'm one of the voting members, and that was another honor, right? They saw enough in me to honor me with the seat at that table. So for a banker, especially in lending, to hit loan committee, that's like,
because you're voting on to whether or not to approve the loan.
Yeah, and because of that, it's a double-edged sword. It's awesome. It's an honor. Like that, you can vote on this stuff. It's not so great from the perspective that you can't really be too involved in the origination side of the house.
Yeah.
As much as you want.
Because then you have a conflict, right?
Of course.
You can't be approving and
That's-
also originating, right?
Of course. I just oversee.
From the mailroom to approving loan, like it's like
Yeah.
to
It's
me,
huge. We've closed, for example, an open doors program, which is affordable co-ops, which is essentially you come in, you relocate tenants, existing tenants, you rehab the structures, the actual buildings, and then the tenants have first option to come back and buy at an affordable dollar price point. So that price point is vastly lower than market, and it's a way for the city of New York to stimulate home ownership, right? And the pride in home ownership. There's nothing that, it's like having a new car and a new house. Once it's yours, you want to take care of it.
Yeah.
And it's our way of assisting the city of New York to achieve their goals, which is a wonderful thing. That's a no lose, to be able to work with the city and help the city meet and reach those goals. There's not too many banks that participate in it. The banks that do participate in that do all the mega deals, like the $100-200 million stuff.
Right.
We've been more focused on the smaller HPD sponsored projects because of the fact that there seems to be a need for institutions to do those. Now, it is a very difficult, very cumbersome process. It's a very closed circle, and you either been in it or very hard to get into it.
Yeah.
The only way I've seen people really penetrate that is through joint ventures, which basically means I have to give up half of my project and work with an experienced, call it HPD or nonprofit developer, to then be able to work with HPD. A lot of institutions work with HPD not only for the cause, but also for credits, CRA credits. So one of our requirements as an institution is that we have to hit certain CRA thresholds. But by virtue of our natural catchment, which is the boroughs, Bronx, Brooklyn, Queens, our CRA credit is almost automatic.
Yeah.
Like, we're CRA by design. So we don't necessarily need HPD credits or to work on these projects to achieve our CRA threshold. However, we choose to, because we appreciate the mission. We appreciate it's just good for the city.
Yeah.
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 It is. What does your typical borrower look like? What's the type of property that they're trying to get a loan for?
So in terms of borrowers and bank customers, we see them all. So we see from the dedicated, most expert staff developer to that individual who the property may have been in the family for X number of years, and now they've decided to take the initiative to try to develop. And we've worked with everyone in between. So construction is a very set process in New York City, and we're very fortunate for that. DOB and the City of New York has done a tremendous job in creating an environment where there's full transparency and uniformity for purposes of just, this is the process and follow it. You find good contractors, some experts, some not as expert, but in general, it's two parts. It's one, you need to know that you have someone who's experienced with the process and the different building methods and techniques. And then you also want to ensure that you have the second half of it, which is the paperwork. Navigating through DOB, coordinating inspections, it's just as important as someone who can lay a foundation and lay a facade and bricks and what have you. Then you also have your design professionals. And the attorneys and expediters.
Yeah.
And
you can't forget us.
Of course. It becomes, you have to do the same work whether they're expert or not. And it's a balancing act. You don't want to just completely discriminate or alienate a certain customer base because they're not up to par with some of the more experienced guys. And it tends to be that some of the more experienced guys are just easier to work with because they've been through it and they just know the process. Banking in general is a very narrow margin business, at least on the community bank side and the smaller bank side. First off, our funds are not cheap. We're fighting for funds and deposits and keep our costs low.
Right.
It can't all just be borrowed.
Not giving things away.
First off, the regulators don't let you do that.
Yeah.
They can't be all brokered deposits. They all can't be borrowed funds, you have to have natural organic deposits. And we don't have storefronts. Storefronts, another name for like branches.
Yeah.
We don't have storefronts on every block like some of the larger institutions. So we really have to draw them in. We have to really get creative with how we bring in these and cut our cost of funds. But just a natural byproduct in a high interest rate environment, it's expensive to borrow. And then you got the uber experienced developer who just wants that. He knows what the cost of funds is. He wants that razor thin margin. He's like, listen, you're making 0.25%. You should be happy with that. I was like, oh, really? Okay. That's fantastic. Well, maybe we're not the bank for you.
Right.
So now you go down the list. And we found a lot of comfort in the middle market space, that mid-sized develop, not the complete. So
this is the Goldilocks theory over here.
Yeah, we want to work with a developer who is not as price sensitive, but has the degree of experience that we can underwrite with confidence, and we feel safe.
Yeah,
that's the balancing act, because ultimately we will be subject to a review cycle with our wonderful regulators, which in our case is the Office of the Comptroller of the Currency, who it's a great office, by the way. We love you very much. You keep us honest.
Shout out.
Shout out to them. We don't view regulators as a negative or they're looking to hurt business. It's just establishing an understanding. They have a job to make sure that we're engaged in prudent lending.
Yeah.
And we have a job to convey that's exactly what we're doing.
Yeah.
But it just takes a lot of time and money and effort to convey that information.
They're just holding you accountable. It's their
They're
job.
always accountable, but
Yeah.
that's okay. I mean, look, you got nothing to hide. You got nothing to be afraid
Exactly.
Yeah.
of. Like, we do real business on the street with good people. Like, we love to meet good people.
Yeah. What are the types of projects that you saw when 421 expired? There was no 45X, maybe even in the beginnings of 45X, versus the types of things you're seeing now as all these housing packages are kind of coming together.
In the middle market space, I mean, the dedicated developer, this is what they do. So
They're going to do it no matter. They're going to do it no matter
good,
what.
bad, or ugly. They're looking for reasons to keep pushing their projects. I think a lot of us, regulation is a fluid thing. The developer is inclined, especially when they already purchased the site. It's already sitting on their portfolio. They have to do something.
They're not just going to be paying debt on it.
Yeah.
Not sitting it, sitting
Correct.
dormant.
Correct.
Yeah.
And this is what they do. I think a lot of developers, they got to where they are, like, just winging it.
Yeah.
I get that feeling.
We've spoken to enough developers to know that.
Yeah.
Yeah, they've winged it. The private space, the developer, the landlord has been, to an extent, demonized a little bit. And this is a community guy saying this. Where everything is just sort of dumped on them. Say, listen, you obviously are a well-positioned individual because you can buy and develop land. Therefore, you should make this uber affordable and bring your AMI thresholds down to virtually nothing in order for you to get a tax incentive.
Well, how are my investors going to put in money if
Correct.
that's going to happen?
And I think people get stuck in a silo where they forget that the Lincoln and Holland Tunnel has an entrance in Manhattan and Jersey's right there, where you don't have all the red tape and rigmarole that you have here in New York City. Jersey is the hottest residential market in the entire Northeast, probably in the country. And it's not by accident.
Yeah.
I am for regulation, but it all has to be in balance. The taller you build in New York City, the more expensive it is in terms of compliance costs. You have site safety managers required for anything 7 stories and up. I don't know if anybody knows what these guys cost, but they're not cheap. You're talking about 6 figures on your budget for 2 years. It's not realistic to then say, here, you're going to have to contend with all this. We want you to build housing. By the way, deep in affordability. Doesn't connect.
Yeah.
It does not connect.
Are you getting lots of inquiries about new projects?
I am getting calls. So out there in Asia, in China specifically, my understanding is that you can't truly ever own real estate.
Yeah.
And there's some type of auction process, and it's basically like a lease over a certain amount of years. this is probably the best thing about America, and New York City in particular. You buy, and you guys are attorneys, you buy real estate, everything from the core of the earth to up top
Yep.
belongs to you in perpetuity.
Yeah.
And can be transferred generationally to your children, grandchildren, what have you. That's unique and special. And the safeguards that we have with title insurance, with our just process in general.
Yeah.
These are all and the just relative peace and economic stability that our country affords everyone. This is what propels the international investor, and I get them all, from Asia to Europe, South America. This is why we want to be here. This is not something we have over there. So us as an institution, we welcome it because we feel that we're bringing and attracting, very intelligent people, very capable people, and that's who we want to do business with.
Yeah.
We don't care where you come from, as long as you come here and you want to build something great for not only yourselves but for the society, for the community that you're serving. Then that's the cool thing about banking, right? We all have an impact. I think we all should strive to establish and want to impact society positively. New York City is a better place because of the work that we do.
And you're just a well of information and knowledge. We haven't even tapped into most of it, but it'll have to be like a 4-part series at some other point. I wanted to give you another opportunity just to kind of, if there's anything either you want to promote, plug, or if you want to tell people something that I didn't say that you wanted to mention, this is kind of your opportunity to shine.
I do want to say to the public out there, let's do more to support local community banks. Yes, they might not be as accessible physically, but we're definitely accessible virtually. And there are still in New York City those types of institutions where you can come in and have a real conversation and meet bankers that will tailor to your needs.
And you're talking about
Definitely.
deposits, things like that.
Deposits,
Yeah.
lending. Give us an opportunity. You can actually get people on the phone with us.
Yeah. And you should reach out to Doug. And is email the best way to?
Email is definitely the best way.
Can you let people know what your email address is?
Absolutely. So my email is Douglas. That's DOUGLAS .Romero ROM as in Mary ERO at poncebank.net.
Yeah, and we'll include his email address in the notes too. But it's good to have it on the podcast. And I agree. Please support your community bank. They're important. Building housing is important. And thank you so much for sharing your story, which is an amazing one. And we're excited to premiere it and let everybody hear what amazing work Ponce Bank is doing, amazing work you're doing. And please reach out and support the community. Thanks, everybody.
Thank
you.
you.
Thank you.
Bye.
Thank
Bye.
you all.
Well, everyone, that's our show. Thanks so much for listening.
And of course, don't forget to subscribe. Also, don't forget to leave comments. We would love to hear from you.
Yeah, feel free to reach out at info@sideandshine.com or visit our website at sideandshine.com. We really look forward to hearing from you.
You can also reach out to Brenda, Camille, and me at bslakowski@sideandshine.com, C. Almeida at sideandshine.com, and D. Shamshovich at sideandshine.com.
Those are lengthy last names. You can just find us on our website.
That's right.